Well, joining us now, Mike Mayo, Wells Fargo Managing Director and Head of U.S. Large Cap Bank Research. Mike, it's great to see you. Now, we know you're the large bank guy. We get that. But do you think that all the issues with the regional banks are over? Are they solved? Or is it going to be this like cherry picking one by one will fall?
Well, banks, the biggest banks, have benefited really victory from defeat after the global financial crisis, 2007 to 2009, the regulation that was forced upon them, imposed upon them. I mean, big banks were going kicking and screaming, don't do this to us. That's helped the big banks become much more resilient. So the biggest banks have that resiliency that a lot of those mid-cap banks didn't have 1 year ago. So the issue with the smaller regional banks isn't that they're in imminent threat of some sort of contagion. It's that as you pass a certain threshold, $100 billion, you have the extra regulation without the benefits of scale.
Right, but is there going to be like a sweet spot between like 100 billion and 250 or 3 where like you're not mega cap bank, but like you're a little bit bigger and you can have regional scale? Like is that going to be the next tier that you're going to start to cover or something at one point?
Well, the sweet spot is $4 trillion because those are the assets of JP Morgan. One day after Silicon Valley failed, I upgraded JP Morgan, made it my #1 pick last year, and they've just been gaining market share in each one of their businesses, being very consistent, having the resiliency of both their loans and their deposits. 3 decades ago is when our country first passed interstate banking, when you could expand throughout the country. One reason was to create that sort of diversification that would prevent situations like what happened to Silicon Valley a year ago. So when it comes to the regional banks, it's not one size fits all, but to some degree, they've won the battle, but the war is still going to be tough because they don't have the same scale of technology, marketing, and regulatory ability to spread across a larger client base. So I do expect a lot more banking mergers over the next 1, 3, 5 years.
Okay, even if there are banking mergers, which there haven't been that many of, what I'm hearing from you is that it doesn't matter if they have, let's say, $200 billion in assets or even $400 billion in assets because it's nowhere near what JP Morgan has. And so as a result, they will just, in comparison, look less safe.
Now, look, there are some banks that can do it through skill. I mean, Fifth Third's been very targeted with their approach, but just listen to the CEO of PNC. They have $500 billion of assets, and the CEO, just in January, and I went to visit him at the headquarters in Pittsburgh a little over a month ago, he goes, scale has never been more important. Deposits are rolling uphill. Corporate treasurers cannot unsee what they saw a year ago. And so corporate treasurers don't want to have to worry about the safety and soundness of their bank, according to the CEO of PNC. Therefore, they're saying they need to be a lot bigger, and they're one of the top 7 banks. So what does that mean for everybody else?
So what's going to be the catalyst for that consolidation to take place?
Well,
is it more marking to reality some of the commercial real estate loans?
I think you've had these unrealized securities losses.
Yeah.
And frankly, I've been on your show, and last fall I was saying it's fantastical to impose a liquidation analysis on banks. And if you imposed a liquidation analysis of the S&P 500, over 1/4 of the banks would have negative equity. So that was inappropriate and an opportunity, investing opportunity for the last 6 months. So I think in terms of scale and size and diversity, that's what you're going to continue to invest in, and some banks will have it and some won't.
So let's get to one of your top picks, and that's Citi. So there was a New York Post article talking about restructuring of the century when it comes to Citi and sort of the behemoth job or the huge monster job that they have to do. And you said that that's wrong, that like they can actually do it. Talk us through it.
Well, look, Citi is remarkably consistent. They've failed their last 12 restructurings.
Okay, that doesn't bode well.
That was my attempt at a joke there. But everything's turned upside down for Citi. As you know, I was very negative during the global financial crisis, and I had my sell at $480 and wrote a book about this and everything else. And now I'm really emphatically calling the turn here in Citigroup. It's my #1 pick ahead of JP Morgan right now, and I think 13 is the lucky number for Citigroup, and I think they've never been successful with their restructuring before, but this one's different for two reasons. Number one, they're selling businesses equal to 10 to 15% of their revenues. And number two, they're going to a line of business structure, 5 lines of business. And you say, well, who's done that before? Well, I'm wandering our research floor at Wells Fargo, and I run into Chris Carey. He's the consumer staples analyst. We don't always talk to each other that much. And he's like, this sounds like Procter & Gamble. So we published a report. Procter & Gamble 5 years ago, they sold off businesses equal to 10 to 15% of their revenues. They consolidated their geographical and functional and other functions, they called it the thicket, into 6 lines of businesses. And you know what? He said, when they first did it, it was kind of a big yawn. People didn't recognize what was happening at Procter & Gamble. And then, according to Chris Carey, this has become one of the best turnaround stories he's ever seen in decades. 2 weeks from this Friday, Citigroup will be done with the decisions for its org simplification project. So 5 lines of business, delayering management from 13 down to 8 layers, ridding a lot of co-heads, co-reporting, co-ventures, and committees. And they've done that in 6.5 months. So I think 2 weeks from Friday, it's going to be kind of, you won't feel the earth move. If you're at Citigroup in the building, it's not going to shake. It'll be like a butterfly just flying off and away. But you're going to come back in 2 years and go, wow, that was a momentous occasion.
All right, the flapping of the butterfly wings has long-lasting impacts. All right, Mike Mayo, thank you as always. Mike Mayo, of course, the senior banking analyst over at Wells Fargo.